Hey everyone, welcome back to Corporate Decoder, the place where we uncover the stories hidden in plain sight within company filings. You might not know it yet, but today's filing is a real nail-biter full of unexpected twists and turns on what should have been a routine shareholder meeting. Get ready to decode Netcapital's latest performance report. Alright, so today we're diving into an 8K filing from Netcapital Inc. This is basically a company's way of telling the SEC and all of us about major events that happen between their more regular reports. Think of it like a special bulletin board for important company news. The big news from this report happened on September 11, 2025. Specifically, it's about their annual shareholder meeting. This is Netcapital Inc., a company we've looked at before. And today we're seeing how their shareholders voted on some pretty critical decisions. Just to set the stage, Netcapital is incorporated in Utah and they've got a trading symbol NCPL on the NASDAQ. This tells us they are a publicly traded company and subject to these important disclosures. Let's get straight to the heart of the filing. This report details the results of their annual shareholder meeting and, folks, it's not what you'd expect, given the number of proposals that didn't get the thumbs up from shareholders. So the main point here is all about what the shareholders decided when they voted. It's like an election for the company's future direction. On September 11, 2025, Netcapital Inc. had their annual meeting where shareholders cast their votes on several important matters. And get this, a massive 88% of all their outstanding shares were represented at this meeting. That's a really high turnout, showing a lot of shareholder interest. It means the decisions made here are backed by a very substantial portion of the ownership. Now here's where it gets really interesting. The shareholders re-elected all 5 directors, which is usually a good sign, but then things take a turn. They did not approve the company's auditor. They also voted no on executive pay. They rejected changes to their stock incentive plan. They said no to moving the company's incorporation from Utah to Nevada, and they even rejected a proposal to allow for adjourning the meeting if needed to get more votes. This is a pretty strong statement from the shareholders. It signals a significant level of dissatisfaction or caution regarding the company's current plans and leadership decisions. Interestingly, while the shareholders didn't ratify the audit of Frucci, the company notes that this ratification isn't actually required by law. So even though the shareholders sent a signal, the company isn't legally bound to change its auditor based on this vote. It's more of a commentary on trust and confidence in the auditor. Let's break down these votes section by section to really understand the numbers behind this shareholder rebellion. First up, Proposal 1, electing the board of directors. All 5 nominees were re-elected. This means the existing leadership team will continue to steer the ship. Now look at these numbers for Martin K, for example. There were only 5 hours 806243 5 off for him, but a staggering 142253 votes to with Hody, 38 votes to with Hody, 538 votes, the 8 votes to number of votes for him. And this pattern repeats for all the directors: Cecilia Lenk, Averly Liss, Stephen Geary, and Arnold Scott. All received far more withhold votes than for votes. Take Cecilia Lenk, for instance, 5-8-1-17-3-3 votes for her against 14-21-14-3-14 fair. Withhold votes, again, the withhold votes are nearly triple the 4 votes. Avi Liss saw 508-666-655 votes for him and 1,416-497 withhold votes. Stephen Geary received 581-16-28 votes for and 114-25 and 53 for withhold votes, 142-53. And Arnold Scott got 586,571 votes for and 1416,571 votes for and votes 1416,591 withhold votes. So while they were technically elected, because they got more votes than any other single candidate, this massive number of withhold votes effectively means a large portion of shareholders are signaling their lack of confidence in these directors. Now let's look at Proposal 2, the auditor appointment. This is where the shareholders really said no. Out of almost 2.7 million shares voted on this matter, only 829,789 voted for ratifying Frucci, while a whopping 17,82229 voted for ratifying Frucci, while a whopping 17,86256 voted against. That's nearly double the votes against compared to votes for. This is a strong rejection of the company's chosen auditor. Moving on to Proposal 3, the say on pay vote. This is an advisory vote, so it's not binding, but it's a clear message on how shareholders feel about executive compensation. Here again, the shareholders voted no, the numbers show 14,27858 against the executive compensation, while only 897,829 voted for it. This is another clear signal that shareholders are uncomfortable with how the executives are being paid. Proposal 4 deals with amendments to the company's equity incentive plan, basically changes to how employees and executives can get stock. This also failed to get shareholder approval. The vote here is even more lopsided, 14,529,19 against these plan amendments compared to just 5,038,325 in favor. This suggests shareholders have concerns about how these plans could dilute their ownership or are structured unfairly. Proposal 5 was about reincorporating the company from Utah to Nevada. This is a move often made for tax or legal reasons, but shareholders said no, and they rejected it by a similar large margin, 14,516,325 against versus 5,410,555. For this could mean shareholders are comfortable with the current structure or they distrust the reasons behind the proposed move. Finally, Proposal 6 was to allow the meeting to be adjourned if needed to get more votes. This also failed. The vote on adjournment was 1841 33 POIR and NI 141,495 for. This is also a clear no from shareholders. They probably feel enough information was presented and they don't want to give the company more time to potentially sway opinions or redo things. And that brings us to the signatures, the official sign off on this report. Here we see Martin Kay, the CEO, signing off on September 12, 2025, confirming the accuracy of the information in this filing. Now, looking at these results overall, Netcapital Inc., shareholders are sending a very strong message, it seems. A significant portion of the ownership feels the company's current direction, specifically regarding its auditor executive pay and equity plans, is not in their best interest, and they are not afraid to vote against proposals to make their opinions known. The massive number of withhold votes for directors, despite their re-election, is a particularly stark indicator of a growing disconnect between the board and its shareholders. While the re-election of directors technically means they remain in place, the sheer volume of withhold votes puts them on notice. A key risk here is the potential for continued shareholder activism or a loss of confidence that could impact the company's ability to raise capital or execute its long-term strategy. The rejection of the auditor is also a red flag. It could signal concerns about financial reporting or trust between the board and its shareholders, while the re-election of directors technically means they remain in place. The sheer volume of withhold votes puts them on notice. A key risk here. Alright, that's our breakdown of Netcapital's latest shareholder meeting results. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.